Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, September 3rd at the market's close. Before we start, please know that I wish all of you a very, very enjoyable Labor Day weekend. And now, on to the market. Well, investors are protecting their portfolios for potential stock market volatility after logging 7 straight months of gains. Pretty cool, huh? How do we know they are? We know because utilities are the S&P 500's best performing sector so far this quarter with a 10.2% gain. And you know that we've been getting a little more defensive in here as well. After all, the market has gone 292 calendar days without a decline of 5% or more. That's nearly 3 times the average since World War II. So we in this room, we know how to deal with that kind of market. So let's go on and look at 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 spider, symbol SPY. Of course, the SPY closely follows our S&P 500 index, and that index acts to us as kind of a crystal ball. It shows us the market's mood and manner, very important. Now, today we can see and look at, and this chart goes back to January, the first of the year, and look at this, just this year alone. Of course, it goes way back from there. Look at the nearly picture-perfect uptrend that our market has been in. Just coming up and back down to the green line, the 50-day moving average, just doing it over and over and over and over again. Certainly can't argue with this. Today, the SPY closed at yet another new all-time closing high at you can see right here, $453.08. That's about $45.30 on the S&P 500 itself. Now, the prior new all-time closing high was just a few days before that on August 30th. That was actually Monday of this past week at $452.23. Now, you can see that the last low that's held here was August 19th. We talked about that low before. Here you can see how the SPY came down once again to its 50-day moving average, a very important moving average with technical traders such as ourselves. So you can see how the SPY fell down almost to the 50-day moving average, but bing, then went right back up again. Also, if you will, notice the volume that came in here. Notice the volume when that little move came down, but then moved back up again, back over its 20-day moving average, the red line. And again, as I said, today is at $453.08. That's where it closed at another new all-time high. So with that said, now we have new resistance at 454. We can see here that we have potential support at the 20-day moving average at 446.77. Of course, this 50-day moving average, except for a brief fall here back in March, I mean, it has just acted as an incredible trend line, and that comes in now at $439.68. So you're going to want to keep that number at your elbow somewhere if you're trading. What we do see here, of course, if we look down at the 14-day RSI, we see that snuggled up again right at the 70 line, which means it's nearly overbought. It's been like that for quite some time, and yet the SPY keeps going. But again, guys, noticing that the utilities are taking off, and if you look at the XLU, you can see that for yourself. That has been historically a sign of the fact that traders and investors are moving money into one of the most defensive sectors that there are. And you'll notice that I've been getting more defensive in the last few weeks. Week before last, we started moving into the S&P Insurance ETF, the KIE. It's just, yes, techs keep going up, and we'll look at that in a minute, but you also want to be wise. So anyway, we'll keep going here. Do please keep an eye with me in the coming week to see if it'll be a short week because Labor Day is Monday. And of course the market's closed, but in the coming week, of course, let's see if the SPY can continue to keep holding these highs. More importantly, can it continue to stay above the 50-day moving average? Very, very important. Okay, our next today is a daily chart, as we always again look at. The Invesco QQQ, symbol QQQ, represents the NASDAQ 100, a major index in the stock market. It can be a real leader with the top stocks in it, including momentum stocks like Apple, Amazon, Alphabet, Facebook, Netflix, Microsoft, Intel, that group. So we can see how the QQQ has also been rising very, very dramatically. It did have a slight tumble here back in March of 2021, but then continued higher, started making higher lows. That's what we ask in an uptrend, higher lows and higher highs, and then broke out in June. And today it also made a new all-time closing high, with closing being the important word here, at $381.57. It made yet another new all-time closing high before that, 2 days ago at $380.58. Now, like the SPY, the QQQ fell down on August 19th right here, and also made a low right atop its 50-day moving average at $359.96. And you will notice that I drew a trend line here from these lows back in May up connecting this August low. You'll see how very clearly this trend line follows the green line, the 50-day moving average, to where they're just about glued together. That makes these numbers very important. Whenever you have two technical indicators at the same number, then that number becomes very, very important. So we've got a trend line and the 50-day on the Qs coming up at $365, rounded off to $366 if you want to, making this point here very, very important. We will also notice here that right now the 14-day RSI is moving to almost, not quite, but almost above its overbought position. We notice that volume is low for that, which can sometimes indicate there's not a lot of buyers around. But we trade with an open mind. We trade what we see, not what we think will happen. Also here, though, notice this bottom trend line that I did draw here, as I said, along the 50-day. Then notice the top channel line, and notice that these two lines are going from pretty wide apart in the beginning of May. Now they're coming closer and closer together. So this is called a wedge. You can liken it to a pressure cooker where the pressure is getting stronger and stronger. The bulls are holding it up, the bears are pushing it down, and at some point there's going to be a move that will be very, very exciting. We just don't know which way that excitement is going to be. So know that the Qs are in a wedge formation, could break higher, could break lower, of course. But it's just something to think about. So we have new resistance up here on the Qs at 383. We have nearby support down here at the 20-day moving average at 372. We have more support, and this is all potential support, at the 50-day, again at $365.73. And then, of course, this August low was at 359.96. So that's also potential support there. So all in all, there's quite a bit of potential support here. But let's see if this market can continue to go higher. And hey, if it can, then fantastic. But I am going to trade wisely, as I know you will, and keep my protective stops in. Okay, our final chart today is a chart of the Global X Silver Miners ETF, symbol SIL. It has, the Global X Silver Miners has 40 holdings in it, including Wheaton Precious Metals, Polymetal, Pan American Silver, Korea Zinc, and Hecla Mining. Now, it's not on this chart, but if you looked at a monthly chart, you would see that the SIL actually started trading as an ETF in April of 2010, and it made an all-time high at about 94 in April of 2011. So that's what this, I like to look at long-term charts when I'm getting into, or thinking about getting into new trades. I want to see what happened. So since then, if you note with me the first part of this year, how this chart was absolutely bananas. It flew up, it flew down, it was all over the map. Am I going to trade this? No. I like orderliness when I trade. And I can certainly find that in a lot of different places, so I don't have to be scared out of my wits and potentially lose money for something that's going all over the map here. But, and after the SIL came down here, let's look, we notice it went up. It went up to nearby highs at about $50 here in June. That was the high, made kind of sort of a shallow head and shoulders, then fell down pretty dramatically to a nearby low here on August 20th of about $37. Now, since then, the SIL has rebounded, and when I captured this chart today, the SIL had closed right here, you can see, at $41.28. Now, you can see how it's getting more orderly from June on than it was in April and March. Precious metals tend to be a defensive play, as you probably know, but silver also has the added value of being an industrial metal. There's a lot of reasons here why I chose this, but I do not intend to buy a whole lot at one time, and I, of course, will keep my stop in, so let's talk about it. Now, when it came down here, it came up in July up to the 200-day and the 50-day. That crossed over, and it came down, and if we were to draw a trend line here, which I probably can't do freehand, but you will see that the SIL is now broken out of that downtrend, broken over the 20-day moving average, and today it broke above the 50-day moving average. Now, what I am looking to do here, and I can see a small head and shoulders here, that is being, an inverse head and shoulders, I should have said, that is being broken out of today at the end of the trading day and at the end of the week. So I can see this inverse head and shoulders, which is a positive pattern. So in the coming week, and I'm going to be careful, and I'm only going to use small share size. In the coming week, if the SIL can stay above the 20-day moving average, and that's the red line coming in now at $39.37, if it can stay above the 20-day moving average, I will add a small position of the SIL to my trading portfolio. I'm going to have a tight stop down here at $38.40, right down here. If you were to look on a monthly chart, you would see that this $38 area is actually support on a monthly chart as well, and that works for me. I'm going to keep a tight stop at $38.40. If and when the SIL rises up and over the 200-day moving average, which is now coming in at $43.13, I will add to my position, and of course, my stop will be trailing. I turn it into a trailing stop pretty quickly. So you may want to keep an eye on the SIL in the coming week. And now, before we go on to final thoughts, please know that if you'd like to become a more successful trader, please check out my trader training programs. You're going to like my simple strategies targeted to swing trading, trend trading, bottom fishing, and much more. These programs can help you increase your gains quickly and easily. So to see all of my training programs, you can go to the link on this screen, or much, much easier, you can click on the orange button below. And now on to final thoughts. This week's question is, when I trade, do I experience performance anxiety? Do I experience performance anxiety? And if I do, how can I avoid it? So now if you think about your trading day, or the parts of the days when you're trading, I think you're going to agree with me that most trading problems stem from performance anxiety. And what this means is it occurs when a performance that is usually automatic becomes the object of obsessive self-scrutiny. This self-focus on performance creates an interference effect, so your performance can no longer flow naturally. Your decisions aren't flowing probably with the best amount of thought. Performance anxiety frequently interferes with athletic performance, public speaking, test taking, and of course, short-term trading performance. Now, I've told you before that during the trading day, you should take a few minutes and take note of your internal feelings. I mean, do this several times a day. How am I feeling? Are my shoulders stiff and tight? Does your head or your neck hurt? Are your facial muscles tight? If you feel pain, stiffness, or tight muscles. And here's one that I learned 20-some years ago from a trading teacher. Are you holding your breath? A lot of traders hold their breath when they trade. And I did it. And I can remember this trading teacher walking around the room with about a dozen of us yelling, breathe, breathe. So are you holding your breath and you don't know it? You may be getting body signals that indicate, and it could be because you're not following your trading plan, or you're not sure of the market's next direction, or you don't think you're on the right side of your trades. These feelings indicate your fears about the outcome of your trading performance. Your fears about them are dominating your decisions. Now, it's not only losses. Performance anxiety can also show up when you're booking a gain. You may chastise yourself if you think you're taking a profit prematurely and that the stock market may continue to run higher after you sell. Please know, this is an unavoidable situation in trading. No one knows where or when the top price of any price swing will occur. Not me, not you, not anybody in the market. Your best action is to come to terms with the fact that you and everyone else are rarely going to take profits at a stock's high point. It just isn't going to happen. So let it go. Know that so you can relax and delete that particular form of performance anxiety from your trading day. As I always say, hey, just keep green on your screen. That's all you need to do. Finally, the best way to avoid performance anxiety is to trade with a plan for each trade. Then develop a calm mental and emotional approach. Breathe. Begin the trading day with and strive to maintain that approach throughout the day. Finally, please know that this is a great time to check out my trader training programs. To see all of my online training programs, simply go to the link on this screen, or better yet, click on the orange button below. Until next week, happy Labor Day. Keep green on your screen. I'm Toni Turner, and this is The Market Now.